is the market going to rip up? I mean, that's a 2% mover. That's a 1.38. VIX at 1644. So 1.02, 1.03. And also, I want to put in the VIX 1 day. There it is. Um, all right. Coming into the day, I actually just saw this study last night. This doesn't happen very often. This happens about 9% of the time. But when the VIX 1 day is higher than the normal 30-day VIX, selling premium increases the win rate by quite a bit. So I certainly want to be focused on selling some premium. But like I said, with these big moves and a plus minus at like 54, 55 points, I mean, how far up are these ceilings? That's a 1+% move way the heck up here. Okay. So I think to be on the safer side, we're expecting like a 1.02, 1.03 either direction. I mean, it's 1.1 to the downside if we're going to hit 63. So, I mean, call me nuts here, but on the upside, if I can get a sell trade around, I would say maybe 50. It's so far up there, but like, if I could sell like 90 points higher, that's 1.25%. Look, there's still risk. But if I went 10 wide and tried to stack up a couple bear call spreads, am I willing to at least get $1 per spread? So if I sold 10 wide, get $1, sold another 10 wide, get $1, that's $200 in price would have to blast off to the upside, exceed the VIX, which right now would be like a 1.02% move. So I mean, we'd be selling up here like 1.2, 1.25. I'll watch it, right? Took an iron condor yesterday, made 90% on it. That's awesome. Yeah, yesterday was a surprisingly great Thursday for, let's see, 5 minute. I'm gonna pull up. Yeah, it's funny. I just listened to that. It was a Tasty Trade panel yesterday that talked about comparing the VIX 1 day versus the VIX 30-day. And anytime the VIX 1 day is greater, which is only, this is what the sad part was, it's only like 8.5% of the time. However, when it is VIX 1 day greater than VIX, just doing like standard daily profit plays, we're like 90+% winners. The average P&L was way higher than just doing your typical daily profit play. So I thought there was some merit to that study. Um, but obviously having the frequency of only like 8.5% just means that you're not really going to see this happen very often. But when you do, it should give you a good indication that it's probability is on your side if you're selling premium. So it strikes me as one of those type of days where, we could have some volatility, things kind of settle where they are, but I don't think we're going to necessarily settle like at crazy highs. I mean, the floor could come out. That's one thing I don't really want to do today is call the floor, but if I could sell nice and high, that'd be great. Or just sell extremely low. But just trying to be cautious of the lows because if the VIX is going to rally, if we blow the top off here at 17 on the VIX, I just don't want to call that bottom if we're going to go from a 17 to a 19 or 17 to a 20. All of a sudden, this market could break the floor and, off we go. So ideally, I'm just going to look at selling as high as possible. The premium might be okay because the plus minus on the day is so large. This is literally double what we saw yesterday and most of this week. So things could be crazy, but that's kind of good. I kind of welcome the crazy today. All right. Same thing here. Pre-market levels 30, 35, and 40 on the upside. And yeah, 63 actually seems to be my largest level. 6,300 seems to be the largest level. And we probably won't know this right away. Like at 9:30 in the morning when the market opens, we're probably not going to see any aggressive movement. It's going to be all about Powell, and this is going to be like a longer version of FOMC. If you ever trade FOMC at 2 in the afternoon, usually from 2 to 4, the market does all sorts of wild things. It is Jackson Hole. It is a Friday, and we're starting the speech at 10 o'clock. So I'm just going to go ahead and do the math, set my levels, and then see if price can come to us and give us a trade that we'd like. Okay. One thing that is interesting on the SPX here is we do have, I think 4 out of 5 days have been bearish. Let me check this out. So we have a green candle, but I think we technically closed lower. So we've actually had 5 lower closes. Close lower, close lower, close lower, close lower, close lower. Okay. If this market is super eager about buying a dip, you know, don't assume that just because we've rolled over here for a couple of days down, 2%, that this is going to continue to go lower. It's like, I think we should be somewhat happy that the market didn't fall faster. There have been some reasonable rotations. Some earnings plays have been beat up to the downside. I mean, Walmart retail sales, unemployment claims, like some of the data that's come in lately is not looked great, and that's why there's so much riding on this stupid rate cut. All right. So speaking of, has this changed going into today? We were down to like 70 something percent. Look at this thing. Now it's a 70-30. Pause versus cut. Probability is still a cut, but this has shifted so much from like pretty much a guarantee that the Fed's going to cut rates 94%. Now it's 69%. So I would assume that after either the end of today or by Monday's trading, this is going to be more reflective of what we should expect to see, whether we go higher today and the Fed is likely going to be cutting, or we go lower today. It's just as far as probabilities go. The one thing that would be very challenging would be if we are down to like 50-50 going into September. Um, that just puts a lot more pressure and volatility on the September 17th rate decision. So if this continues to march lower and this pause continues to march higher, we will see. We will see. And it could, I don't know, we could be on the brink of maybe the slowdown to the stall to then the contraction. But I still think the Fed's going to play ball. I think without the Trump noise this year, I think the Fed was still going to cut rates. I think that was the plan. According to where we are core PCE wise, we're still, well above that core PCE. But I don't know. I mean, price stability is the thing. So I don't know why the Fed would just come in and try to rock the boat too aggressively. All right. So plan for the morning, move this back to the SPX, is I'm going to look to sell as high as I can and probably just let prices sit. So if I was going to start selling, I mean, based on my VIX, which is 16.48, we're looking like a 1.03. So that puts me up to around, about 64.35 or so. Okay, so 64.35 potential top. Futures is up a little bit, so we might experience a slight gap. So I'd say between, let's say we gap up around 0.1%. So if we open up around 63.76, get out of here, 63.76 open, and then go up 1.03. Probably like a 63, I'd say 63.35 to 63.45 potential top on the day. Okay, and that's with the VIX at 16.47. If we fall lower, VIX goes up. This bottom might not necessarily stay, but we open up about 76. We fall 1.03. I mean, I like the 63.10 to 6300 potential bottom, but watch VIX. Okay, because if the VIX is jumping to 17 plus, don't try to be here on call the bottom unless you're going to go further and further away from those levels, right? So let's say the VIX jumps up to 17. Well, that means that we could potentially have a 17, like a 1.06% move. So we could go to 1.10, 1.15. And then if there's a floor there, if there's a bounce there, then maybe it pulls back, right? It's just tough to call the floor if we don't get a bounce. Okay. All right. So I'm going to try to sell up here as high as I can. Um, and I'm debating whether or not I go 10 wide or 5 wide. If I go 10 wide, I at least want $1. So if I sell the 35 by 45 and then the 40 by 50, I want $1 on each one of those. So if I could get filled for $2 today, hopefully that's a high probability $2. And I could also use more contracts to kind of scale in if price is going to get, near, I guess, in not at the money. Well, I guess at the money versus in the money. I certainly don't want this to be in the money. But an at the money wouldn't be too bad if we at least come up and reject off that. So maybe trade one would be that initial ceiling, and then contract two would be maybe getting filled for like $5 on a 10 wide, maybe even $6 or $7 on a 10 wide, and see if we can kind of stack things up. Is the market capable of going all the way back up to recent all-time highs and going 1.75%? I mean, it certainly could, but math-wise in the VIX, it doesn't look like that should be the case. We shouldn't go 1.75% today. Anything can happen, but we shouldn't based on the VIX. Okay. All right. Any thoughts? Any questions? Any concerns? This week, waterfall income. We had a great 3-day masterclass workshop, day one, day two, day three. Deanna, I also put together those little screenshots so we can get those posted in the masterclass and training section. Um, should be a really nice way to move forward in waterfall income every Monday when we get together at 12:30 p.m. on whether or not we're focusing on strategy one or strategy two. We actually put a trade in yesterday while we were together during the third day masterclass. That was posted for waterfall income members as well. Pinch point, I looked at the scanner yesterday, priced out all of them. It was like 8 stocks. I priced out all of them. I didn't like the options chain. I didn't like the strikes. We had, let's say a move of like $7, but the strike prices were $5 apart. There just wasn't enough precision to take the trade. Posted a couple new trades in Project Options Edge. Still have some hedges out to December and onwards. And I mean, I'm hedged like 20 to 1 and 40 to 1 out to April lows if something really gets nasty. But I would imagine this market, even on a pullback here, which I certainly think is possible. I think I posted a screenshot yesterday on the post-election. Yeah, it's right here. I take a screenshot here. Post-election seasonality. Yep. So the weak part of the post-election year is now from August, September, October. This is usually when things kind of pause or roll over. This is pretty average. I mean, this is the aggregate for the last 70 years. So, I mean, if we're expecting a correction, now's a pretty good time to see it. Powell could be the catalyst for it. NVIDIA earnings could be the catalyst for it. Non-farm payroll in September could be the catalyst for it. All the above could be the catalyst for it. I don't know, but it's a good time for the market to roll over a little bit. It doesn't make me bearish per se. It just makes me wait for a dip. So, this was my thumbnail yesterday. It's like literally you can see how prices are reflecting Jackson Hole today with Powell. It's a big shift. You can read it. You can read it in the charts. This looks very different than what we saw yesterday. The plus or minus on the day from market makers looks very different than what we saw all week. Okay. Randy says wide. I mean, yeah, wide is fine. I just don't know. I mean, the nice thing is like with this type of IV rank at 16.5 and this plus minus, I mean, I would hope we can go super wide. If I could go out like, 100 points, I'd love it. Like, could I go all the way up to 64.70? I mean, if I could go up to 64.70 and actually get 50 cents to a dollar, I'd love that trade. So I just want to do the math. I mean, if it's plus or minus 54, that's where most of your premium is going to be sitting, right? But that also means we could hit that move and then some. So just I'm saying like, don't be a hero. Just I mean, plus 54, it's like it's tempting to sell that move, right? It's tempting to sell that move right there and go right at the expected move and see how much premium you could get, right? That'd be a 10 wide. It's like, could we get $4 on a 10 wide? I mean, if we do, that's a hell of a trade. But if we're wrong, we're still taking on risk, you know? But if we're right, I mean, taking a quick 50 to 100 bucks out of that trade, just follow the mechanics. So it's funny how the expected move, look at the difference. I mean, this isn't going to be officially until like 9:30. Powell's speech is until 10. So I'm curious if this number shifts aggressively, but I'm still just, I don't know. I don't want to do anything silly. Jackson Hole can be a difficult trade. Um, Last year, I think Jackson Hole was coinciding with NVIDIA earnings in the same week, and we saw like a 3 to 4% swing during Jackson Hole and NVIDIA earnings, and the market was like up and down 3, 4, 5%. So you don't want to get caught off guard. And some of that was like during the day, and some of that was post market. But yeah, wide iron condor would be great. If I could sell high enough and sell low enough, I'd love a wide iron condor that price just kind of stays contained. Um, but if we get a direction today, I think that I just don't want to get steamrolled. You know, I'm not trying to scoop up pennies in front of a steamroller. So I'll see how high up I can go. If I can essentially call like a potential top here and bottom here, then sure. What can we get premium wise for those levels? I wouldn't mind that. But if we're around 63.70 and I can go up, let's say 100 points or down 100 points, then yeah, I mean, could I get a pretty safe 50 cents to a dollar out of a trade like that today with the plus minus being so large? Maybe. Okay. Why can we not put in trade? I mean, we can do whatever we want. I'm going to try to put in the trade early in the morning and try to get my levels sized in. Like, I'm going to try to sell as high as possible. Okay. I'm going to focus on selling calls first. I'm going to sell as high as possible. If the VIX is going down for the morning, then we shouldn't really go much higher than like 64, 30, 35, or 40. We shouldn't really go much higher than that because we're going to gap a little bit by maybe a quarter, 1%. Is that right? Or are we all of a sudden seeing the futures market going higher? Zero point 0.2. Now we're looking at a gap around like 60, maybe 63.80 or so. Okay, well, 63.80 with a 1.03. Now we're at 64.45, 64.50. Okay, so if I'm starting to sell some premium here, I mean, I still need to be aware of my sizing. So I'll probably start with one contract and see what I can get for it. Maybe go 10 wide, collect at least a dollar, and then consider another contract at like $5 or $6 or $7 out of that max $10 risk. Okay. The hardest thing, like this, and again, this would be worst case scenario. The hardest thing would be that price pushes higher and stays at the highs for the entire day, or price pushes lower and stays at the lows the entire day. In a 0-day environment, what you'd like to see is if the market makers are calling for a plus or minus 50, that 50 points up here to 50 points down here, price doesn't close above or close below, right? If it goes up to 50, 60, 70 points and then falls, or goes down to 60, 70, 80 points and then rallies, that's fine. It just keeps it within the plus or minus move. That's the beautiful thing about the market makers. Okay. But I don't know if that's going to be the case. So I'm going to try to sell as high as possible. And part of this because I think this market, you know, should be rolling over a little bit more. I think that seasonal window, I think the market's rolled over for 5 closes in a row. Um, and we'll see. I mean, if it's about to embark on like a reasonable rotation away from Mag 7 just for a second, that maybe we can pick up some dips on mags and other stocks. But for right now, it's kind of out of tech and into other stuff. Heat map yesterday was pretty much red. I mean, yesterday we had 47 versus 48. I mean, it was kind of a mixed market. You had some big red with Costco and Walmart down. So, the consumer was making headlines yesterday with spending habits are changing, right? Even higher demographics. It's like your top 10%, your top 20% were possibly, looking at more value plays like shopping at Walmart, shopping bulk, no longer, in taking on the big luxuries, or at least scaling back a little bit. Who knows? So anyway, that's kind of the highlight from yesterday. Pretty mixed market. Okay, at least it wasn't like all red in big tech. Pre-market this morning. Let's take a look at big tech this morning because pre-market, I'm pretty sure everything was up. So mags this morning's up about 12 cents. Apple this morning is up a couple of dollars. I think that's why you also have the futures gap higher because Mag 7's up. Amazon is up just shy of a dollar. Meta and Microsoft. Meta down slightly. Microsoft up slightly. Nvidia down slightly. Netflix up slightly. Tesla up slightly. So Mags is hanging in there. I think that's where you're getting most of your pre-market futures move. ES is up 0.27. So it looks like we're on a bit of the move to the upside. And if this is like a little bit of a melt up and then, Powell starts talking and the market doesn't like it, and it's just meant to correct, I'm okay with that. You know, I mean, I'm totally fine with the market not making fresh highs. And in order to make a fresh high from today, we gap higher. We'd have to go from the close yesterday 1.75%. That's a big rip considering the VIX is at 16. So hopefully that is not the case. But today it's about just one trade. It's about surviving the day, hopefully taking a nice trade to give us a win. If I can sell, premium that I'm measuring out between like 63.35 and 63.55, I'm going to size in and try to focus on that high not being breached. Okay. All right. 64.45. I mean, should be, but you never know, right? I mean, what would be nice is if we get to the highs, but we reject off the highs. I mean, that's all we really need. Even if we're selling highs, I still like the idea of hitting a high and rejecting, right? Or we're hitting a low and bouncing. Let's see if we have that plus minus on the day. I mean, moving up, let's say 55 points. I mean, we really shouldn't be closing above like 64.25. We really shouldn't be closing below 63.15. That's kind of your plus minus on the day, right? That's what ideally the market maker move is for. Is from day to day, it's like we should be closing within that range. So that's not a bad way to play it. It's just there's obviously risk in all those trades. If it goes higher, goes lower, which can happen. Remember, an expected move is about a 70% chance of winning, right? That's the standard deviation, which is 68%. So you got about a 70% chance there. Okay, it's opening bell. The market's probably not going to move a ton just because the Powell speech is at 10, but I want to see how high can we go. Plus minus at 54. We should have a slight gap higher. We opened up around 85. So I'm going to try to start selling here at 35. 64.35. Okay, so if I go 35 and 45 for at least, that's not a bad fill for 10 wide. Let me try to get, uh, see if I can get 220 for this one. That's a pretty good fill. Okay, I'm going to go one strike higher to 64.40. I'm going to go $1.75 to start things off. Okay, got filled at $1.75. That's a 64.40 by 64.50. And I'll go 45 by 55. Try to get $1.55 to this one. All right, so I'm in two bear call spreads right now for daily profit play. I'm starting at the 64.40 and then the 64.45. So those trades are in. So today's the 22nd. Selling the 64.40 call, buying the 64.50 call. That got filled for $1.75. Selling the 64.45 call, buying the 64.55 call. That was filled for $1.55 credit. Okay, those trades are in. Okay. So, and if somehow this thing like quickly drops, like right now, this was so 40 and 50 right here and 45. And so total, I should have pulled in about $3.30 credit. So 175 and 155 is 330. I'm gonna combine these together for a 330 credit. Okay. So I pulled in 330. It's trading about $20 in the hole right now. The deltas on this, I mean, I'm selling like the 18 delta, the 16 delta. Probability should be like safe, but this is just trade one. Okay. We did gap a little bit higher. VIX is at 16.34. If I take this based on the open of the day and we go up 1.03, I mean, we shouldn't go higher than like 64.50 today. My concern is that we have some ridiculous move, even though it wouldn't be calculated per the VIX, but have some ridiculous move where it's like we're going up to the all-time highs again, which would be a 1.5% move. I'm hoping that's not the case. I'm hoping this is like, a little melt up on futures and then the market fills the gap and falls for the entire day. And if that looks to be the case, I'm going to keep the entire, $3.30. I'll let this thing, hopefully fall down to 6,300 and pull out, 80, 90% of that max credit. But it's just trade size number one, okay? Because I will still look to trade this and defend these levels if needed. So if I do a 45 by 55 and I get filled for like, $8 credit, I'm going to take another trade up at those tops. Okay, so 45 by 55, and I'll do a um, 45 by 65. What are our highs? 64.80. Highs up here at 64.80. So I'm going to go 40 by 80 and try to get like 35 bucks out of that. Okay. So all that means is I'm willing to risk $2 on this 10 wide. I'm willing to risk $5 on this 40 wide. All I'm trying to do is call the top. Okay. We shouldn't see price going all the way to all-time highs today. Based on the VIX at 1635, we shouldn't see price going up. Now, VIX one day, to be fair, okay, VIX one day is up to 1824. Okay, 1824 potentially puts us at like a 1.15% move today. Right? So we've been using the VIX, which is what I typically rely on for like the most consistency. But because the VIX one day is greater, it's very possible that maybe we go up like 1.1% today, 1.15%. Well, if that is the case, I want to be aware of that as well. Go 1.15. That still puts us up around 64.42. Okay, if we gap open, go up 1.15, that puts us up around 64.60. So I think within, 10 to 20 points of this level, we should see markets responding to resistance. We look at our levels here. There's a pretty massive call wall between 64.30 and 64.35. The biggest gamble level on the 0DT from what I'm seeing right now in real time is the upside target. So this 64.35 is offering, probably the biggest magnet for price today. Does it get there? Well, it'd have to exceed the 100% ATR. Okay, so that is a tall task for prices to push. We're already at the 50. Can we push the 100? We can. But if we push the 100, can we stay there? Can we push the 100 and fail? Can we get to the 100, then pull back? Remember the plus minus 50, right? Just remember the plus minus 50. Google up big. Yeah, I saw that. Yeah, Meta and Google are doing something together, aren't they? Okay, so I started out with a 40 and 45. So I'll go over here. I'm going to put in a 40. Let's go horizontal. Let's go 45 and let's go 50. So this was a 64.45. This is a 64.50. Okay, so that is going to be my near-term ceiling. And I'm not going to get crazy heavy on this. If I think I can get a little bit more premium out of either one of those trades, I can certainly try it. But I'm thinking if we, push, like remember, this is the week. We did take out the low for the week. So the probability is we shouldn't take the high out. I know it's Jackson Hole and literally anything can happen. Um, but if the market's going to try to do its best to get up and then fall, I'm kind of hoping that this would be like a little bit of a melt up pre-Powell and then the market maybe dumps on Powell. I don't know. It's just a trade and it's just a day. So there's obviously a risk. We'll see what happens. But I'm getting a pretty decent premium. I'm okay with that. I'm selling nice and high. I'm selling above my call walls, which I'm also pretty okay with. I just saw that the gamma flipped to positive gamma. Positive gamma means that the market is rallying, we're selling calls. The market is falling, we're buying calls. Okay, or rather buying the underline. So we'll see. Powell at 9. It's 9:38. Powell should be coming on at 10. I'll pull up a little financial juice. And let's see what we have here. Stock futures paused this week, string of declines. Market scaling back bets on imminent rate cuts, which again, if the market's scaling back the rate cut probability, I can't imagine that's a good thing for stocks either. It's like I don't understand why this market expecting like a 95% rate cut melting up to those July 31st highs, melting up through CPI highs, and all of a sudden they're like, wait, could they possibly pause? Like how the market hasn't shown more disappointment in price action, you know? So anyway, um, I'm okay with the trades. So trades are in, potential top and bottom. Again, this could fluctuate. VIX is going slightly lower, so I will keep an eye, on the VIX. If the VIX is going to go down all day, hopefully we are right in our calculations, and we will see prices just kind of chillax. So I might take on some heat initially, but overall, I mean, those are some pretty good credits to be filled at for a 10 wide getting filled for $1.75 and $1.55 at like 15 and 16 deltas. Those are pretty good premiums. Randy says in with an iron condor 45 by 55 and 10. That's really good. That's really good. 45, 55 and 10. That's really good. Now, understand this, Randy, like that trade is great. Like that's an awesome fill. The odds of prices going nowhere today are pretty slim. So there's definitely going to be some high flying price action. Um, that's all. I'm just saying like 250 out of a 10 wide is good. Like our max risk would be 750, but I do expect prices to try to test this high or possibly fill this gap and fall. Like I would expect price to have some pretty dramatic moves today. I mean, even the last couple of days, I mean, we had like a plus minus 21 or 22 and the markets moved 40, 50 points on the day. So with the market expecting a, I mean, it's expecting 55 points in the day or 54 points in the day. It's like we could go 75 to 100 points one way or the other. Is it possible that we hit like 64.30 and then drop to 63.30? Yeah, like all that could be possible, especially with this little early rip. ATR for the day would be 64.15. That'd be the 100% ATR. Anything above that, I'm still selling above these premium levels. So if we hit a 100 plus ATR, okay, that's getting way above the current day's ATR, which it happens. We can get above the 100 easy. But if we get above the 100, the question is, does it stay there? And I'm hoping that we kind of hit it and then maybe drop. Like we start hitting some resistance levels and we fall. I would like nothing more than like having this get hit and then falling, this get hit and then falling. Okay, I want to keep an eye. I'm just going to look at replicating the same trade. So if I do the 40 and 50, right now that's trading for 270. Wow, 240 on that second trade. Can this one fill? I've got this one pending already. I'm going to keep this one open for maybe if I get like a five to $7 credit, I might take a second stab at that high level. So in with two trades so far, and I'll keep an eye on the 45 by 55. If that offers me like $5 or $7 of credit, that's at least a 1-to-1 or more reward to risk. I'll probably toss in another trade. Okay. All right, Randy, keep me posted on your Iron Condor today too. I want to see how that goes. I think that's great. Like how far, I mean, from opening bell, you went up about what, 50, 60 points higher and about 70, 80 points lower. Okay. Dave says got filled at $2 and 150. Okay, that's good. I mean, right now they're trading, and again, it's the expected move is changed. Like now you can see that the deltas I got in for like a 16, 15 delta. Now they're trading for a 22 and like a 26 and 22 delta. So price has gone up and my deltas have shifted a little bit, but I'm gonna keep an eye on this. So we're just above 6,400 now. So we've had three straight directions. I mean, one trade I could consider is the in the monies. If I go like the 64 here, I mean, I'm hoping that we're not going to pin where we at as far as my. I just want to make sure I stay out of this dead zone. Um, let's see, that is 95. So if we get back down to that, that would be okay. That's a 15 wide. That's a 20 wide dead zone. This is a an inverse iron condor, but the premium here is really bad. Like only getting like that's awful actually. 530, that's terrible. I'd be risking, 470 to make 30 cents. Usually on a trade like this I can get sometimes 80 to 90 cents extra. So if this is trading for like 580, 590, I'd be more willing to take the trade. I can't believe it's trading that low actually. That's I mean even 25 wide I'm only getting like 580, 570. So that's a no-go for today. All right. We'll see if price wants to fall. Okay. I'm going to set a chart alarm. If price comes back and takes out this gap, and we maybe even fill the gap today, then our bear call spread should be showing some nice profit. If I pulled in $3.30 of credit, I'm going to try to pull at least $200 of that today. And the one thing that would make me the most mad would be that we sit here and run all day to the freaking top and then we crash next week. That would piss me off because it's just price manipulation. And we just run up here and we just like test the highs and kind of screw everything up with the zero DT levels. But it's just all the different planning of like worst case scenarios. Like I know there's risk in the trades, so I'm hoping that I can manage myself into a winner today. I'm going to set a chart alarm here around 75 and see if price can come back and try to make an attempt to fill this gap. But we're already pushing up near the 100% ATR. So the question now is, do we sustain it? Do we push up to it, hit it? Do we push up to it, hit it, and sustain it? Or do we hit resistance and then fall? Okay. So that 45 by 55 is offering 285 now, $3 now. If this is offering over like $5, I'm probably going to take another contract. Try to give myself a little bit more defense at that like 50, 64.50 handle, 64.55 handle. Other than that, not much to do. So, out of the gates, nice little pop in P&L. I think I took care of all my major expirations this week. So this week expirations, that's right now. I pushed out some rolls. I rolled some calls on MicroStrategy. I do have some SPY calls for next week I need to roll. Keep an eye on those. Russell, I've got to roll some calls as well. I might roll those up a little bit and out. Qs, I think this is my collar trade. That's a covered call at 36. I'll roll that as well. Okay. What else? NVIDIA. So yeah, so I've got some more expirations to tend to next week from JD, Walmart, natural gas, Snap, Tesla, NVIDIA, Qs, IWM, SPY, MicroStrategy, and then today's SPX. Okay, so that's the trade for right now. Waterfall, waterfall, waterfall. Keep an eye on those. I already did, Mike. I posted in Telegram for members. Should I enter the trade? I mean, the trade's still valid. Yeah, the trade we took yesterday is still valid for waterfall income, the one we did in class yesterday. Okay, 9:48. So we got a little bit of time. Let me pull up the pinch point scanner and see if anything popped up. Anything new on the radar. We had 8 stocks this week, and we are still at 8 stocks. So looks like the same list as before. Fix is new. I don't remember that one from yesterday. The price that went out. Comfort Systems USA trading at 695. I have a feeling this is going to be a very wide option chain. Fix. Big gap to the upside. Part of me just wants to take a bear call spread on this thing. What the hell do they do? Let's see here. Heating, cooling. Oh, maybe not. That just seems like a little aggressive, doesn't it? Blow off top there at 163. Oh my gosh. Who knew this is outperforming Nvidia? Just buy Fix during the April bottom, 281 up to 700 bucks. Wow. Not yet. I'm hanging in there for right now. If I'm going to get filled on a redo trade, it's because I want more premium. So SPX, I'm not going to double down, not right now. I'm not getting enough premium for it. So if I looked at the trades here and I look at the 40 and 50, it's only offering $3. Okay, that's okay. That's, about 1/3 of the width. This trade is offering about 285. So I'm going to try to go a little bit higher. If the 64, 45, and 55 is offering me at least $5 credit, I'm considering another trade. I'd like to say I'm going to take it for like maybe $6 or $7 credit, so I have less risk. But price is going to have to continue to kind of push up and threaten those levels before I take the trade. I don't need to double down when I'm only getting 1/3 of the width. If I'm going to double down, give me, $6, $7, $8 credit out of 10. Then I can double down. Okay. And obviously doubling down still has risk. So I'm trying to take on way less risk if I'm going to add another contract. So right now, here's how the trades are going to work out. In order for us to see some profit, let me just type in Fix. I'm curious what this thing does. Comfort Systems USA. Big fat snowflake. Interesting. Who would have thought it? This is what the pinch point scanner is good at, is finding me stocks that I haven't looked at in a while. But we had this big blowout earnings. That's a big positive move, actually. It was up 20 something percent on earnings. Now let's go to the options chain and see if this trade looks even remotely good. We got a huge move out to January, but now it's dependent on the strikes. And this is what I was concerned with. We have a 145 point expected move, but the strikes are 20 wide. So if I went up 100 bucks and buy the 800, I'm gonna have to pay $5 to make 15. Like that's fine, but this is gonna be like a trade that cost me 1,000 bucks. So if I went 100 up or 100 down, I pay $8.30 to make 11.70. This is pretty expensive for pinch point. It really is. However, let me see. Look back at some of these other ones. I mean, when do we have some megas? I just don't want to see the stock fall asleep for like an $800 risk. I mean, it trends pretty well. It goes sideways, trends pretty well. I mean, it certainly do. It's kind of amazing that like after this big move to the upside, it's just immediately pinching. I just think it's too expensive. I mean, it's a good looking trade. Um, I think for fun, like I'm going to set a chart alarm at 600 and see if it gets there. I'm going to set a chart alarm at 800 and see if it gets there. Because if it does and it hits those levels, then that would have been a pretty easy like 30 to 40% take profit. But it's still an $800 risk, and I think that's a little rich for old pinch point. Rich is posted in the tracker, and it was posted in your waterfall alerts. So waterfall trade is going to be posted in waterfall. That trade was posted yesterday in SPX. We pulled in 60 cents for a November expiration. So check your waterfall alert section. Should all be right there, or just check your waterfall tracker. Okay, anything happening here on the VIX? Again, Powell doesn't speak for another few minutes, so I'm thinking the market is just doing its thing. VIX is down a little bit. We'll see what the VIX does. Financial juice, Powell, here's Jackson Hole, keynote speak. I mean, I don't want to watch it. Usually everything he says, it's like, this is a nice website, financialjuice.com. This website is pretty helpful because it'll just print out like headlines. He says something, it's a headline. He says something, headline. That to me is a lot easier than trying to sit here and listen and then go back and forth between price. So I'll just hang out and let price do its thing. All right. So watching, we're at 64.05. The 40 by 50 is trading for 285. This one's trading for 250. Like I said, if either of these are offering up, $6, $7, $8 of credit, I might be willing to take the trade, but obviously that's going to be like testing the at the money prices. Like we'd have to be pushing up to, 64.20, 64.30, 64.35, and we'll offer that higher premium. So if I'm looking to defend those highs, I want it to be a very, very high credit. So right now I'm just going to hang out because if price is up for the morning, okay, if it's up for the morning and then it gives it all back, then we're going to be in good shape. So if it's up for the morning and then it falls back down to fill this gap, our $330 is going to be trading for profit. Okay, I could see the market getting a little bit more excited, trying to find some call walls, and then by the end of the day, back down here, or lower. If it looks like it's more promising to go down, then I'm going to keep the entire 330 today. But if we can get another trade in at these highs and get some profits, I mean, goal is win the day. I was a little bummed I put in so many pending orders yesterday and did get a single one filled. So I'm just gonna stick to the plan, follow the rules, and not force any trades. I think we got a good trade in. So far, so good. And we'll see what price does in these next, anywhere between 5 and 30 minutes. Like once Powell takes a podium or starts to talk, what's the market gonna do? I'm hoping we go down. And honestly, it's like we pushed up a little bit, futures up, but if the market's like hating on this Powell situation, I mean, I don't know why he'd say something that's going to lift the markets to all-time highs. It's probably a problem. From the technical side, that's like melt up city. We have yet to see a pullback to the 50-day moving average, and you don't see that going too many points above. Like it is shocking how far we have run from this 50-day cross. We have gone, 78 bars. This is probably as long as it's ever been. Like back in the 90s in the run-ups, back during some of these crazy crises bottoms we've had. It's rare that you see that many bars on a daily chart, and it's also rare you see, over 250 to 300 points, which we got at one point about 250 points away. I think the highest point was like 270. So when this was making a high in July 31st, we were like 200. Yeah, look at this. There's like 290 points away. This is why I think we have to hit. Like we're gonna hit this 50-day. I just don't know if we have to poke the highs first and then we hit it. But let's see if prices turns for us. That's all we need. What feed gives you Powell info? I mean, it's financialjuice.com. So you can click on the link here if you want. I'll post it. Want to watch the headlines? You can watch the speech as well. Of all the speeches I've listened to over the years, it doesn't help. Just look at the headlines, trade price action, and we'll see if we made a good trade today. I'd rather watch golf. Yeah, speaking of, what is it this week? We're in the FedEx Cup now. We are playing. Oh yeah, Tour Champ. Oh, this is the big dog. This is the Tour Championship. I like how they changed the format. Although it's not really. I mean, Scheffler's number two on the leaderboard. He's probably going to win. Like, the guy, like he just closes so well. If and, last year he won the FedEx Cup because he started with like -5 or -10 just based on being the point leader. So they changed the format where you actually have to go out and win the tournament this year. So yeah, I mean Scheffler's a stud. That guy just controls his golf ball. We'll see. And then after that, it's then I don't know if it's a President's Cup year or if it's a Ryder Cup year. 2025 Ryder Cup. Oh yeah, I think we're on home soil this year, right? Keegan Bradley, is he a plane captain? I don't know. I don't know where we're talking golf right now. Spectator guide 20. So it should be a 2025 Ryder Cup. Are we playing at Liberty National? So we got Scheffler, Spawn, Xander Schauffele, Russell Henley, Harris English, Bryson DeChambeau. We got guys in the bubbler, captain's pick, Thomas Morikawa, Ben Griffin, McNeely. Hmm. Okay, 10 o'clock. All right, price is up. Here we go. Oh my gosh, look at that. Okay, let me keep an eye on some trades here. So a 64.45 by 64.55, you've got to be kidding me. This is trading up for like 385 right now. It's still not enough to get me filled. I swear if this market goes to 6,500, I'm gonna be so pissed. Like if we hit all-time highs today and just completely blow out my VIX one day or my VIX rules. I mean, the VIX one day is down to 16. VIX is 16. Like what the F? So we're already at 64.40. Okay, I'm not ready to double down yet. Look at this stuff. So I've got some zero DT levels changing very aggressively. We're already way above the 100%. Okay, that 10 wide is trading for $547. I'm going to change this thing to like $9. I'm just going to take a tiny risk on it. Okay, this 35 wide, that's up to 80. I might as well make this one a super tiny risk as well. $38. So I'm going like super high credits on these fills. Price just hit like 125, 130% ATR, maybe more. I mean, it might have actually hit like 125, 130% ATR right there on that spike. Any thoughts? Adjusting policy, stocks are higher, labor supply is softened. I mean, that's just a big move, right? Right out of the gate, that's just a big move. That's also, I mean, intraday price action wise, since we've been going up all morning, it just seems a little unsustainable. I mean, if market maker's going to do anything today and like do their job, it seems like it's a little unsustainable that this just goes up. And I mean, but a run to 65 would be literally poking all-time highs. I just don't know if we can close and stay above there. So let's see here. Downside risks are rising. So we've got suggesting that employment situations could be softening. All right, still watching my credits here. That 45, the 64.45 by 55 is now offering $6. So if you want more than 1-to-1, you can get it. I'm still going to go after like a very high credit. Okay, I'm willing to take on the risk here, but I'm going to go after a high credit and see like if I'm going to get blown out today, it's going to primarily be on these two trades and nothing else. Okay, Sandy says sold at 64.70. Okay. All right, let's see how this plays out. I mean, nothing. Honestly, like there's no why. You can't see like one headline that's like that's why it moved. It's like, what did he say? Shifting balance of risk may warrant adjusting policy. Okay. So does that mean inflation policy or does that mean rate decision policy? Like I don't know. I mean, that's the one thing that's been criticized on the Fed is like we're sitting here like holding this like 2% inflation target, which has not been seen for 2 years. And so adjusting policy, meaning maybe we operate within a 2 to 3% inflation target, which allows the Fed to start cutting, right? That would be like the upside squeeze, if that's what he meant. But to acknowledge we have downside risks, employment is getting softer, blah, blah, blah. Like, I don't know. I still think it's a market maker's day. But just be completely aware, like if this market's going to gun for these high, I mean, look, the VIX is at 15. I mean, we did the numbers, we did the math, we followed the rules. I think that market makers should still respond to the levels that we need them to. If they don't, then Jackson Hole, you can mark it as it's a pretty rough situation to trade because markets can be so random and blow out all the rules. Like, look, you saw that I measured the VIX from the close yesterday. I measured the VIX from the gap open, and we're going to see if we sustain this close or not. If we just run up for the morning, look, here's the misleading part about today. We can run up all day and run all the way back down and still show green on the day, and nobody knows anything different. And meanwhile, we're watching this stuff unfold right in front of our very eyes, and it's like up. What are we up right now? The market's up over 1.25%, right? So now the question is, does it stay there? Do we have like a big 1.5 to 2% day? I don't know. I don't know. But this is the stupid crap that happens with Jackson Hole and Powell combination. I don't know. So I said potential top. We already exceeded it. It's up to 64.55 in the day. So now the question is, are we going to close above these levels? So zero DT flows get up to like 6,500. I'm going to modify this to a 3 and 4 day combination. And it both, I mean, they look like they're kind of climbing towards that like 6,500. So edit here, short term. Okay, I'm going to make a interesting modification here. This 40 by 80, I'm going to modify this thing. I'm going to sell the 40 by 6,500. And I'm going to see if I can get like, that's a 60 wide. I'm going to try to get like 55 bucks. So if we're going to 6,500, I want to get filled at like $5 risk. So I'll put this in for the orders. Pending order. Throwing this in Telegram for daily profit play. 6,440 call. 6,500 call. Okay. So we will see where price ends up going. I mean, at this point, it's like up for the day. I truly think this, like, this big rip, I do think this is a pretty big unsustainable move on the day to have it be that quick in 5 minutes. So going up for 5 minutes and then, maybe running out of some steam around the 125, 150 ATR and then falling back down to fill this level makes our level safe. I sold the 40, sold the 45. Let's see if it's safe. If we're coming up here to this 6,500 that's lighting up, I'm putting in a trade. I'm selling a 6,440 and I'm buying a 6,500. That's a 60 wide. I'm trying to get filled for $55. I'm taking on very little risk if I get filled in the trade. Okay, I don't know. Like, I honestly don't know what's going to happen today. We've already blown out the highs. We've already blown out my calculated move. We're already above the VIX measurement. So we're in outlier mode already. Okay, so I'm putting up here, 6,500 intraday liquidity level as potentially like the high. But like I said, the worst case scenario is that we go for the highs of the day and then we just stay there. If we have all this crazy, stupid volatility today, but we still give some of it back, then it's at least a normal trading day. But if we go all the way up for the day and I lose today and then next week it's just an easy sell, well, that's the dangerous thing about a zero DT is like you didn't have enough time to trade. Okay. So let's see. I'm gonna see if I get filled. Like this one's now offering $7. I'm actually surprised it's not offering more because we're trading at the top of my call. Like we're at 64.56. We're above my call. Like I'm surprised I can't get more than like 650 on this trade. And at this point, can I pull in something over 65? Looks like I can. Um, 10, 20. I get $1 for that? No, it's just that's an unnecessary amount of risk. I like the idea, but it's an unnecessary amount of risk. Well, it's a big move in the market. So on the positive side, I'm nearly at another all-time high for the portfolio. If I'm sacrificing a little bit of that profit on the day for my own personal account, that's fine. But client-wise, we're looking good. I just want to see if price will actually respond to any of the normal calculated moves, i.e., a 50% ATR, 100% ATR, and we don't stay above that, right? We come back up. Remember, the high is 64.80. Okay. So if we respond to those all-time highs, I mean, this gamma level is lighting up at 65. I mean, I could see it getting hit, but if we get it hit and then it falls back down, like I said, if somebody's asking about market maker day, remember, it was a plus minus 54 points. Okay. So the market can run 100 plus points and then fall back down into that plus or minus 50, and the market makers still did their job. Right. Now that's if they do that, because obviously market makers on the flip side could also be just buying calls and offsetting their delta. But we'll see. Okay. So it's offering six and change. I might settle for eight. If I show this for $8, I might take the trade. Otherwise, I'm just going to sit tight for right now and see if we get back below 64.45. I mean, realistically, we're only upside down about 10 points. I mean, for the real risk on the trade, it's like if we come back down to 64.45 or lower, then everything kind of fixes itself. The hard part is going to be if we're going to run to a 200 plus percent day, and do we sustain that close? That's the big if. So, I mean, I might lean in a little bit more aggressively near this 6,500 top. If we hit 64.80, I'm probably looking at some sell trades up here to see if I can get a bit of a top and wash some of my risk. I mean, percent wise, if we go to 65 on the day, what's that move today? 6,500 puts us up over 2% on the S&P. Okay. That's a lot with a VIX starting at 16. You're nearly doubling what was expected. So I don't know. And there's always risk. So just because I want to call the top doesn't mean that I successfully can. So I'm just Gonna hang out for right now. But let's get some more headlines, I suppose. Reasonable base case that inflation affects tariffs will be short-lived, so he's trying to kind of calm down this inflation talk. Tariff-driven upward pressure on prices would spur lasting inflation dynamic. Unlikely given downside risk in the labor market. We cannot allow one-time increase in price level ongoing inflation problem. Slowdown in job growth has not opened up a large amount, has not opened up a large margin of labor market slack, which we want to avoid. Soften in line with demand, break even job growth down sharply. All right, well, that just was a huge jump. 90% probability the Fed rate cut in September versus 75. So you literally see this huge jump on probabilities. Look at that. 74% now 91%. Right back up where it was. Now, this isn't changing October and December, which I think is interesting. It's not changing October, December. Son of a biscuit, man. I mean, it's blowing out the water. So now my 45 by 55 is trading for almost $7. Again, it's tempting, but if I'm going to add any more risk, I'm adding very little risk. So if I get filled for $9 credit, then I've got a potential $900 profit, but I need to see price get back below 45. We're already up 1+%. NASDAQ's already up as well, 1.5. I just, it's, it's a little discouraging to see like technicals like this that are so reliable just not matter right now. And I know that this is just one day. This doesn't mean anything. Like one day of trading doesn't mean anything. So the most important thing is I don't make silly decisions. If I lose on the day, I lose on the day. And what do I lose to? Like an outlier move to the upside. Okay. Meanwhile, you know, I'm close to a fresh high in the portfolio. I'm taking the day trading in my personal account. I can take the heat, take the drawdown, take the swings. But the overall portfolio continues to benefit from the melt up. Okay. And the day is also not even close to being done. Correct. So we'll see. This one might get filled for $9. The 100% ATR is back down to, I mean, it's so far down there, like 64.20. It's so far down there. There's definitely a rate cut expected, though. That's what we just said. So the big jump was right here. So this today, okay, today this was sitting around 69% and it just jumped up to 87%. I mean, it was 94% last week, and then it was 89, and then it was 84, and then it was 69 going into today, and it just jumped up. Like, look, the Fed is likely going to cut in September. Okay. But if they cut in September, now the question is, are they cutting again in October, December? So it's going to be 3 cuts or it's going to be 2? I mean, the market doesn't care. We're looking at still getting about 5 cuts until the end of 2026. Okay. And I'm just going to throw it out there. I hate to say it, but I feel like this 100% ATR, we're nearly at, I mean, this measure move is how far? 70 to 14. That's about 44 points. We're already, I mean, we're at a 200% ATR today. That's a big freaking move, man. That is a big move. The previous all-time highs are at 80. Okay, go back to your charts. Previous highs here are 81, previous highs at 80, 81. So if that matters at all today, then we'll see this inefficiency candle probably get filled. If I did a 60 by 65, part of me wants to do like this 70 by 80 and just see if we reject off the highs. I don't know, man. It's just one of those days where it's like the more tempting it is to like call the top, call the top, call the top. Just don't take on a bunch of risk. If I get blown out in these two trades today, it's fine. I'll survive. I'll move on. But if I just keep stacking up doubles and triples and quadruples, it's like I'm just taking on unnecessary risk. So the day isn't done. Let's see if we can fall back down in any way, shape, or form. Here's what the market doesn't know, right? Market can be green all day, even to this level. So we can blast off to the upside, settle back in, and be less than 64.40, and we can still make money. Even though the market went up 200% ATR, it can still pull back and still be positive on the day, and yet we can still get paid for the original plan. Okay, so let's see if this is just a bunch of intraday noise. Um, let's find out. I think that this inefficiency candle here, I mean, it's a 5 minute chart. I'm hoping that the market wants to at least come back and try to test it. Randy, how come up 55? Because I went 60 wide. So I sold the 64.40 and the 6,500. That's a 60 wide spread. And so I'm trying to get filled for $55 of that $60 spread. It's not filled, it's still pending, but I'm just going to wait. Okay, so we're trading at 56 right now. So I'm going to put a line here. Let me get my drawing tool. So I need to see if price can get back below 40 and 50. So I sold the 40 by 50 and the 45 by 55. So I need 40 and 45 right here. There. So if price can get back below this little yellow box, then our bear call spreads are going to be fine. Okay. And this is one of the beautiful things about Jackson Hole with a day like this is the market gives it a big fat pop and it just isn't sustainable. So we go up for the morning and then we close later in the day right back down where this gamma level and this gamma level price is right in between. And that's why I keep saying like you'd be surprised how good market makers are at containing the prices. Like day-to-day guardrails, they typically don't let it get too high or too low. And even with a crazy rip like this that blew out all of my calculations, it might still cooperate and give us the win. Okay, but let's see if we can hold, below my 40 and 45 levels today. Was it a 45 and 50? 40 and 45. Yeah, 40 and 45. Okay, so I needed to get back below 64.40. Does an increase in volume in the SPY indicate increase in volume in SPX? I mean, if you're looking at because that's the thing you don't have volume indicators on SPX. It just I mean it could, but obviously an increase in volume can go both ways. You can have an increase in volume and still see the market short from here. You know. All right, we will see how this plays out. So we had to have stretched. Let me measure here on an ATR. Let me go ATR. Can I get an indicator? Let's see. Trying to think if I can get a visual indicator on this chart. Let me see if I can, for a 5 day. So I'm going to go 5 period, 1 day, and how high can I go here? Style, inputs, sentiment color, ATR. There we go. So this gives me an idea. What did we hit today? We hit a 2 times ATR, which is roughly what I calculated right here. So I looked at there's the open. We went up 50%. We went up 100%. I just measured that move. Like every 50%, every 100%, we doubled that. So we had a 200% ATR move today. Now, does it stay there? Does it sustain this 200%? Or is it the market, runs up here, closes back down near 100, and all it is, a high guardrail that was tested, but market makers do the job to properly defend it. I don't know. Okay, so I've got to watch the yellow box. I'm going to keep my levels here. We do have that 6,500. That price might still try to come back and find, even though the highs were at 80. Anything can happen. I've still got a pending order here for 9 out of $10, which means it's a very low risk trade. I need price to get back below. I mean, we're kind of hanging out around this 50 handle. I mean, come on, dude. This is kind of a silly move today. But anyway, while this all unfolds, I mean, all I'm going to do now is just hang out. If the market wants to go higher, how did it change all of a sudden? That should be from the close. Yeah. Okay. Meanwhile, we will see. Eds, what's 2563? Are you talking about my 60 wide? Yeah, I mean, I'm not taking the trade right now, right? I mean, if this comes up to like 50 to $55 credit, I'm going to take a stab at it. If I can risk $500 to make $5,000, I'm going to take a stab at that trade. But in order to get there, we have to see price, continue to push higher towards that 6,500 handle. So part of me is like, okay, encouraging price to do that, but I want to see price reflexively bounce off those highs. Okay. If we don't bounce off those highs, like we're toast on the day. So it doesn't do me any good to keep taking on unnecessary risk. So if I'm taking on this trade here, I'm only going to risk $100. If I'm taking on this trade here, I'm only going to risk, $5, $500 to make potentially thousands. But if we're stalling out around this current high around 70, I just want to see a price will come back in anywhere between opening for the day, ripping up to the highs, settling for the day. And again, here's how we know if market makers are good at their job. If today's previous day's close to today's close, so close to close, all right? So this is close here, okay? And then close at 4 p.m. So all the way over here. Wherever price is at today at 4 p.m. If we are within plus or minus 55 points. That's how we know market makers are great at their job. Because it's a Friday, I would hope that they are. Otherwise, they're hedging, they're carrying this crap on into next week. But if we can see price blast off, go 200% ATR, and still settle in to a plus minus 55, we're still good on our trade. Okay? So we'll see. The plus minus 55 is what the market maker move was today. That was the plus minus in your broker platform when we started opening bell. It was like a plus minus 54 and change. So if we're within that, even from the price here, plus or minus 55. That's what I'd like to see, kind of I mean, for the close of the day, that's what I'd like to see price be at. Okay. All right. So I'm going to let these trades marinate. We're at 55 right now. This trade is trading for 715. Even my 40 by 50 is not even offering $9. If I bump this up to the 45 and 55, that's at $6 and change. I'll take the trade for nine, no less. Otherwise, I'm looking at calling the top around like the 64.80 handle or the 6500 handle. Okay, 80 is the previous all-time high. 65 is what the zero DT gamma called all morning when we had this huge jump. All of a sudden, I started to see that the upside was, we were getting some order flows, liquidity levels up to 6,500. That could be the ceiling on the day. Again, what I'm hoping for is if we're gonna find it, either we stall at 200% ATR and we fall, or we fricking find it and we fall hard. But we want to see a ceiling today. It's that simple. If I see a ceiling and price reacts to it, great. If we see a ceiling today and price just hugs the ceiling, that sucks. So I don't want to take on a bunch of unnecessary risk. Okay, if we get up to this level, I could still sell credit up here, but I'm on the hook for about $1,600 on my original two credit spreads. So I'm not looking to add another $1,000 to $2,000 of risk on this trade. I'm looking to add like maybe a couple $100 more, right? So I need to just kind of hang out and let price do its thing. It is annoying. Anything else in the headline front from Powell, and then I'll switch gears here into some waterfall income. And of course, and now we have Trump that's talking, so it's not even Fed. Like it's been Powell all morning, and then what happens? Trump, 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 Trump. What else? So probability rate cut just jumped to it in a big way. Resume fully pricing in two cuts by the end of the year. That looks like a September and December. Balanced approach may warrant adjustment in policy. Fed proceeds cautiously. Um, let's see here. So tepid indication of possible cuts ahead of ahead. Tariffs are leading to higher inflation. That's Moody's. Okay, and then after that, it's like Trump. Here's the so Powell's done. Powell's done in the day. Full text of Powell's speech. This is everything the guy said. Yep. So here's his entire speech. I'm gonna save this. I'll share the link if you want to read it. If you can glean anything from it, let me know. Otherwise, it's just price action did what price action did. So there's Fed speech today. I'll come back and read that in a second. Any other headlines? Because now we're switching to Trump. Let's see here. Kennedy Center. Monetary policy Fed framework window. I'll fire Fed's cook if she doesn't resign. I don't even know if he can do that. Putin and Zelensky working together. TikTok going. And anything else. Now it's just a bunch of noise. Okay. So shifting balance of risk may warrant adjusting policy. I mean, we had a feeling they're going to cut anyway. Now it's just probabilities go up. All right. So I'm going to switch gears. We had a great week with waterfall income. If you are interested to see, a 3-day masterclass, you can jump on board and get caught up with. We have a core strategy one, core strategy two, lots of examples, and 93% trades that we've won so far in the service, 97, 98, 9%, 99% chance of a lot of our trades getting paid out anyway. That's what I want to talk about. So I'll do this for the next like 30 to 40 minutes. We've been talking about this stuff all week. Before I jump into this, I just want to show you the classroom. You go to one-click trading. So waterfall. So come into the waterfall income, go to masterclass and trainings. And yesterday's recording should be posted here. So we should have 3 thumbnails from August 19th, 20, and 21st. On top of that, we will have a little reference guide to go with each class. So you'll have like some screenshots that show day 1, screenshots that show day 2, and screenshots that show day 3. So this is day 1. right here, day two, and then day three will be posted hopefully today. Deanna, can you confirm that? Can we post day three? Should have been in the cloud to process and post. Okay. And core strategy one, core strategy two, we do this trade every week. We took a trade yesterday. Usually we reserve this trade for Mondays at 12:30 p.m. Okay. All right. Um, the 1121 SPX put spread. Yeah, I mean that trade's totally fine, David. Remember what the trade is. We're getting paid 60 cents, right? So like that's an easy income trade. PDF should be in that masterclass section, Randy. Yep. Okay. I'll get to that in just a second. I'm sorry that real trading is taking a bit of a priority today. So 750 on the 45 by 55. I'm like look to see here. Can I do like a 90 by 65? Really? 90 by like how is this? Okay, I was gonna say it showed 88 dollars a second and that's a buck. Okay. So 90 here. Let me see if I can get 750 on this one and a 95 by '05 for 750 on this one. So I'm gonna level in. I'll share this out with daily profit play. Pending orders for low risk to see if I can manage some net risk on the day. 6480 or 6500 levels are hit. All right, so I'm going to post an image here of my pending orders. Um, 65. It's like even this trade for $9 isn't fantastic. I think I'm just going to focus on these. I hate to say it, but maybe this 60. So maybe a 70 by 80 for $9. And I'm going to delete the 45. I'm going to delete this 45 by 55. Because if we don't come back down to 45 today, then that trade is worthless. So I'm going to cancel that trade. But I'm going to keep the 6440 by 6500. That's a, 60 wide call spread. And I'm trying to get 55 bucks out of it. So I'm looking at it like it's low risk. If we go 6490 by 6500, I'm going to put this up to like $8. I'm only going to risk 200 bucks on that trade. The 64, 70, and 80, I'm going to get $9 out of that one. The 90 by 5, that'd be, I'm going to go $9 into this one. And again, maybe I'm asking too much. Maybe it's asking for too much fill, but that's what I'm going to post. So these are my working orders right here, and I'll post those for members in Daily Profit Play and Telegram. And the day isn't done, so we will continue to kind of let the day grind. But pending orders at high credit, low risk. If any of those fill, then we'll monitor it. I'll have my final hour session this afternoon and we'll talk through it. I still need price to see if we can get back below 64.40. So less than 6440 today would be a good thing. We opened up, and this is where I can kind of recall back to the market maker move. We opened up at 84 today. If we go 84, 6384 plus 55, 6439 would be just inside that threshold. If we're inside of that entirely, like hopefully we're less than 6439 by the end of the day. So that 4 p.m. close is going to be critical to see if market makers do their job. If they don't, then I get beat up today, and we come back and trade again tomorrow or Monday. Okay, I'm canceling that. So all the orders look at Telegram. Those are the only working orders I have. So I am modifying. Yeah. So see image. These are all of the current pending orders. Okay. So I'm allowing price to potentially move. I haven't seen an update in Gamma. I've got it here on my dynamic trend. We're up to 200+% ATR. So do we go higher? I mean, that is kind of silly to do it, but Jackson Hole can be silly. And this is the shit that I warned about. It can be silly. It can be crazy. It is. It is. For a 0 DT, this is a stupid move, right? But this is what price does. And what would not surprise me is I'm sitting here at fresh all-time highs for the year, and okay, fine. Like, I'm not upset by this, but the reality is this is probably going to get faded next week. We have NVIDIA earnings. We come into the rate cut. It's like all this stuff gets priced in, priced in, priced in. And then by September, we still have a correction anyway. I mean, all we're doing is we're pushing back up towards highs again. All this is keeping the markets away from the technicals that I've been looking at. So a one-off move in Jackson Hole that turns around next week, nobody should be surprised by this. Okay? But all I can do is manage my risk and let's see if the market makers can do their job and defend. Because the day is positive, it probably put a lot of investors as eddies that we're going to see green on the day. But as long as we stay anywhere above here, it's a positive day. Nobody's watching this except for us, right? Like if the market's up here for the entire morning and it settles back down, it still shows positive on the day. It still shows them. I mean, the only thing that would be left to celebrate would be like the market pokes all-time highs again today. Even if it doesn't close above them, it's still going to be a headline that says we hit all-time highs again today. But we didn't close above them. We'll see. So I'm just going to let the day continue to work. I've got my risk in. I've got my trades in for high credits. If they get filled, then we'll continue to monitor them for the end of the day. But we've got the Qs up, 1.6%. S&P's up 1.4, Dow's up 1.7, Russell was up 3 1/3. Just a huge screamer on the Russell. So, I mean, markets are loving it. Volatility's been smashed right back down from 16 plus. I mean, look at this VIX. It's kind of wild how the VIX is going down so aggressively, and yet we blew out the upside move. So anyway, that's just freaking trading, man. So anyway, look, we had a great week in waterfall income. We spent a lot of time together on Tuesday, Wednesday, Thursday.